Okay, so this is the chart. This is the chart we're going to break down today. So it's going to be fun doing this one, and I'm going to explain something first, because this what I'm going to explain has a very big part in how I look at things, how I see things, how I view the charts. And it'll make a big difference to your own way of perception. And to be blunt about it, not just in the charts, but yourself and your way of life, if you wanted to take it that far. But let me explain it to you. I want to explain it this way to you. Here's a circle. It's fairly straightforward. I'll make it nice and big. So the question I have for you is, I just want to mark it out first. And then I'm going to put right there. Okay, so here's a circle. There's a circle. And there's the center of the circle. So the question I have for you is, what is the opposite to the center of a circle? That's the question. So let's say that's the center right there, that dot. What's the opposite to it? Or what's the opposite of it? Okay, that's the question.
Outer rim.
Okay, and again, that is the most obvious answer. So pretty much everybody at the start will say the outer rim, the radius. Okay, but the opposite to the radius of a circle is the other side of the radius. So this is the opposite to that. So what's the opposite to that there? What's the opposite to that? The center of a circle. It's not a trick question. You can see.
Is it the same place?
Exactly. The opposite to the center of a circle is the center of a circle, which means it has no opposite. So this is oneness. There's only one. And then this opposite here is two-ness. So we generally, people, and we all do it as a way of understanding life, is we create a separation. So there's you and I, them and us, up and down, left and right, good and bad, and it's all opposites. And in that, what we do is we create duality, doubleness. So now, why is this important? Because when you're looking at the charts and you're looking at it from a place of duality, is everybody just looks at it in isolation, in this is isolated from that, and this is isolated from that. So what I mean by that is that when you put one opposite in, now you're looking at things in two-ness. So it's like things have two sides. Okay, that's fine. Okay, but then let's put another one in. So now you're creating four sides. So we're splitting over and over and over. And then it gets very complicated when we start putting in lines like this. And this is generally the way people have a tendency to live their lives. They start living in the compartments in between. So they look at something and they're looking at it with only from different places. And what I mean by that is that now imagine this here is your mind, or your own sense of self. And I'm still talking about trading, you got to bear with me, that this is the biggest part that you predominantly occupy. It's like when you stand, you lean in one foot or one leg more than the other. You lean to the outside of your heels. You lean on this part of yourself more than another. And this is your bias, because you're more biased to view things from here. You spend less time viewing from here, and you've got a particular aspect of what you understand here, something, a truth, a value, a particular way of seeing things. But look how much it occupies of your overall view. And you have to go there to view from there. And then when you view from here, you're isolating yourself from the rest. So we live in compartments, and they all have doors. So this room, because it's a dominant one, they'll have a door into here, door into there, door into there. So we have different doors in between. Some places don't have doors. This place doesn't have a door to here. So these two places never meet. And this could be like two values. You value one thing, you value another thing, and they're so opposite each other that never the twain shall meet. You'll never let them come together, because they're so against each other that they can't occupy the same space. So you can see how it all gets very complicated. So how does this relate to trading? Well, when you start looking at all the price action, it can just seem like chaos. No different than if you looked at all of this in yourself at the same time. That would look like chaos too, because there's all different pushes and pulls, and they all seem to, well, some work better with each other, some pull against each other, and it's all be very challenging. And again, I'm not judging anybody, because we all do this to some form. So now, what would happen? And again, think about all the filters. So this is how we filter our life. What would happen if we started to take down the walls? Now, to do that, we would actually have to understand something. One is that we don't want to fight. Psychologically, is we don't want to fight with each other. Because you take down the walls, is you don't want to actually start having arguments with yourself. So bear with the analogy. So when you start taking down the walls, and you place yourself in one view. So you want to position yourself, and you want to position yourself in one place, and then that one place right here gives you the view of everything. You can see it all, and you can see how it all fits together, because when you put all these back in and you're in your opposites, when you stand here, your view is of this. You don't see the rest. And when you do see the rest, it's with this part added, this part taken away. It's harder to see here from here. So you have to go over here to see here. But now you can't see here. You can't see over there. So it's sections. We look at things in isolation. So when you take the walls down, so to speak, where's it going? Oh, when you take the walls down, is you essentially are centering yourself. You physically center yourself, you can energetically in your breath center yourself, you can come into the one breath, you can mentally center yourself, you come into the one awareness. In trading, you come to the one view, that you realize that this is all just one pattern, and that this pattern is a repeating pattern over and over and over. It's the same pattern repeating itself over and over and over. That's the arc. That's the arc pattern. And that when you look at it from here, you can see it repeating itself over and over and over. You can see the connection of it. you go through the different timelines, and there it is. Is you expand it out, you draw it in, whatever way you want to look at it, you'll still see the one pattern because you're looking at it from the one place. Everybody understand? So now you want to get triangulations. You want to get measurements. So when you're looking at something and you're using your indicator, you want your indicator to be centered. So here's a true line because it goes from one side to the other, but it passes through the center. So it's a true line. This is a support. This is a resistance. This is the true line through them. This is a divergence. This is a divergence. This is a true line of divergence. So you want another indicator. So you put another indicator in, and you're creating triangulation. You're creating triangulation because you're cross-referencing. So you've got a top, a bottom, another top, another bottom, brings you right to the center and breakout. So that you're always looking at the pattern and always seeing where it breaks out. So a breakout, again, is back to the center and it breaks out. A top, a bottom, a top, a bottom, a breakout. So you're triangulating. And it allows you to begin to measure out the different arc patterns. You can do it on a 15-minute, you can do it on an hour, you can do it on a 4-hour, whatever timeline you want. But the important part is that you've got your opposites, but you're still looking at it from the one center. You've got your triangulation layered in. You're still looking at it from the one center. You've got your fibs. And again, your actually that is actually your fibs. you've got your fibs. And again, your fibs is part of a natural natural formation in life that builds structure. And a simple example is, look at the wheel. Look at the spiral. Your fibs are a spiral that creates strength. So think about this. Is a strong object is a circular object. Because when you apply pressure to it, the pressure gets dispersed around the whole object. Very strong object. Now when you spiral that, the spiral is like a spring. It becomes a very, very powerful object. So now when you put the fibs in, look how the fibs are creating a spiral. But you put them through your center. And you've got your ABC correction that allows you to recognize the pump and the correction, the up and the down. So you're layering in all your indicators all through the one center. And it's giving you a perception, but that perception is even and clear. And it's allowing you to measure the opposites, but still have them all come together in the one center and make sense. So they're all the different sections or indicators are actually connected together through the center. So that allows you to begin to recognize the pattern, but bring it all together in the one place. So that's probably the most effective way I can explain the process. Has anybody any questions? You get the idea. Okay, so now I'll go a little further. Is a good, and I say 90%, to be honest, it's a lot more than that. But basically I say 90% of people's behavior is predictable. And the reason why it's predictable is because we live in habitual, by habit. Same, we live in that circular nature. So how many mornings do you wake up? How many mornings do you fall, or evenings do you fall asleep? How many mornings do you get up and have your ritual? You get whatever it is, your breakfast, your coffee, your wash. You go to work, you meet who you meet. How many things in your day are you habitually doing every day? So much of our pattern is predictable. Now, if you're doing it from the center, and this is more on a personal level, you do it from one place, it allows you to be very present and engaged in it. So you can have it as an original experience all the time. If you're displaced in it, is we can go into automatic mode. Is we can go through our day and sort of it's a bit like a Tesla. You can put yourself on autopilot and not be so present and still get on with your day because it's so habitual. Where if you put yourself in the one place, you can do it with full awareness. So it becomes an original experience, even though it's a repetitive one. Every repetition of it is original. So that's one of the differences with doing something with awareness and doing something with less awareness or fractured awareness. So why is this important? Because when you really, really understand what I'm saying to you, 90+% of the pattern is predictable. It just repeats itself over and over and over. It might look a little different. You know, one day you put your jeans on, the next day you put your suit on. You still get dressed. You know, you have coffee one day, you know, you have coffee and sugar the next day. It's still coffee. You know, you're in a good mood one day, you're in a bad mood the other day, but you still do the same things. It's still the same. Might look slightly different, but when you really look at it, it's the same pattern over and over and over. So when you understand that and you accept it in the charts, is then you start looking for the connecting points, the pattern. You're looking for those points that are repeating themselves over and over and over, and then you're looking for the true center in them, the true line. And why would you do this? Again, because of its predictive nature. So they talk about in trading the composite man. So all the millions of people who are trading is all their collective decisions are averaged out. So when we look at the charts, we're looking at all the people who are trading right now, XRP, and the chart is showing us the average of all their behavior, all their decisions. Some are going long, some are going short. Some are in short trades, others are in long trades, as in timeline. It's showing everybody's behavior, but it's collecting it and averaging it out. And that's the composite man. So now, literally, that is one entity. And that one entity does the same as us. It is us. 90+% of its behavior is predictable. So that's why when we look at the arc, we can look at an hourly, a daily, a weekly, a monthly, a yearly, and you'll see the same destinations being touched, the same places being gone to. And each cycle of it looked like a different triangle in the sense of it can be a different shape, but yet it still touches all the destinations. It always goes to skyline. There's always a mountain peak. There's never not. There's always a mountain peak. You can rely on it like the sun comes up in the morning. At the top of mountain peak, in the middle of it, you're going to get second drop. Always. You're going to get third drop. Where they land is part of the challenge, the predictiveness of it, where it lands, but you know it's coming. So even that alone is very powerful when it comes to our trading ability and the potential of where it goes. And what I mean by that is once you've got your arc correctly started, once you've got it mapped correctly, and you get skyline and you get third drop, you know that for the rest of that arc until the breakout time, there isn't going to be price action that goes above skyline. So you're going to have double top. You're going to have mountain peak. You'll have final peak. None of those price actions are going to go above skyline. Breakout might, but nothing before it. So that is an enormous advantage when you're doing your trading and your dollar costing and your limits of where do you put your stop loss. The simple answer is above skyline. 90+% of the time, you're as safe as houses. And why am I saying 90? Because sometimes when we're going up, the angle of the triangle is at a slant. So sometimes price action, when you look at it straight on, goes above skyline in a very particular type of price action when there's real pump going on. You sort of have to tilt your head and look at the level triangle is not looking at a straight flush, because the tilt is the ascending nature of it is extreme. 90% of the time though I won't break it. Just as an example. So have a think about it. Is chew it over in your own mind. So get your head around what it means. Because when you understand it more and more and more, is this starts to make sense a lot more to you. So now I'm going to center this conversation around this is the start of this conversation, yeah? This is the start of this conversation. And I'm going to map out the basic. I'm going to copy and paste because it makes it easier when I break it down for you this way, yeah? Here is the bear channel we've been in. So we've been trading this bear channel. Okay. And here is the transition happening to the bull channel. So now this is set, that is set for now. And I believe that we're going to have this set. And the reason being is that this is not viable. This angle is not sustainable on its own. To be honest, this angle is not sustainable, except for we might have a pretty strong bull market where there's going to be a lot of volume. We get a pump. So you never know how viable this is. I may have to put in another one of these down here as we go along. I don't think we'll have to bring another one down to here. But to be honest, we may do. We may do. Depends on how this price action wants to go. I may have to. I'll make sure I get this right. I may have to. All I'm doing here is just putting the same distance in. I may have to put another one in like this. Something like that. I don't think so, but might have to. But for now, it's this. So now this is what we're we're mapping. I'm mapping out the final stages of the drop. Again, so there's excellent trading opportunities here. And at the same time, I'm also mapping out the transition from the bear to the bull. And this is really important to understand these. And these are really difficult times to trade. And the reason being is because there's a push and pull. Is you look at the TA, you know, and one day it looks very bearish, the next day it looks very bullish, or it looks bearish for a few days, and then for 3 or 4 days it looks bearish or bullish, and then people are going, okay, it's breaking out, it's breaking out. Lots of people pile in, you know, there's one fake out, lots of people pile in, here we go, and down we go, and all the bulls get wrecked here, because this is the bear coming down. This is the bull's first attempt, and it fails. So now the bulls will capitulate, come back down here, and this dropping in sets the bear or the bull channel. This here sets the bull channel. So now we've got this channel set. Look, comes down, works along it, takes its first swing at breaking out of the bear channel, gets rejected, bounces, comes back up again. Okay, comes back, look, it comes back down, looking good, we're keeping going, and then all of a sudden it's back down, and look where it lands. And this is one of my access points. Look where that lands. Look where that lands. Right on it. Right on it. And I've marked this in before this even landed on this. I had it marked in. So now look, it runs along here. Little push up and then break down. Rejecting a little bit and then breaking down again. So now is this here coming down. Is it comes down, and what it needs to do is the bulls need to establish a ground in this part of the channel, because you can see the lift, they got rejected, they need to come down again, get a solid ground, and now they have this space, because look, this space is more space that they have to move into. So that this is the first one, down, and then this is the second one, and then up it goes. And what it does is that it creates a double bottom. So it's quite possible that it'll come down here, do a little bounce, or else just come right down. It might get all the way down here, or close to it. And like this, you'll get a spike, and then it will come back. So don't be surprised if you get a spike down here, and then it comes back, and the body comes to here. And now the bulls have established the second part, the bottom part of the channel. And that then frees them up. We'll probably have an arc. And again, I'm throwing this out. We'll probably have an arc going on in here, and then a breakout. And then now we are free of the bear channel, and we're properly into the bull channel. So that's what I believe is going to happen. In some fashion, that's what's going to happen. But now let's look at how I marked this out. What are the things that I brought in? Now remember what I said about the center. So now this is a meeting point. This whole action here is a center point in itself. It's a imagine. Let me do this. Where's my circle? Actually, let's do this again. Imagine that this here is, there you go, a center point. And that price action, let's say this is the center, is moving through it. So this is where it transitions. It's actually not as big. You could simplify this a little bit. So there, like that, I'd say. So you can imagine that it's coming in like this. This is the center play, and then it will come out like that. And that this channel here, the greater channel coming down, and then the greater channel going up. So it's a turning point. It's an axis point, and it's a center point in itself. Okay? And then we have this blue line, and this blue line is a center. This is a center divergence line, which means that its support and resistance, more importantly, is the top predicts the bottom. The top predicts the bottom. The top predicts the bottom. Somewhere along this line, the final breakout will happen. So, wrong way. So now we're going to put this one in. So now this line here, I showed you this previously, lands right where this is. If we to put this in and put this down here, is months in advance, we would be naming this. Equally with this line here, and then equally with this line here. The challenge is to be able to recognize them. And then the more you recognize them and they're set, it's telling you what's coming. And it's not to say that, oh yeah, that's where that dump is going to happen. When I'm have this blue line in, I know that that's going to happen right there. I don't. That's the truth of it. Is you have to watch to see. The closer you get to it, you start to do more local mapping to see if the local confirms the long term. So again, that's part of the triangulation. Is you're getting different measurements and they start triangulating around certain points, then that gives you confluence. It tells you this point is more important than other points because more lines meet at it. So let's have a look at what that means. So now there's this line. Now this line here from the bottom this line is at a place at the moment. I tried it on there. Okay. I'm carried away with this line. Oh, they're fully extended line. Okay. It goes. It keeps going. So what I need to do is catch where I need to catch the. Where is it now? See, you click here that this lights up, and is that it there? I think that's the price action. Ah, there it is there. So now this line was out of place a little bit because it needs to touch off that there. So again, some lines are more obvious than others. So like there's the bottom, there's a touch point, and then here's a touch point. Okay, and again, is you put these two in, at some point it's going to have relevance. So when you see things happening, when you see things happening, you're asking yourself, you know, where's this finishing? Where's the bottom of this? When you see these two blue and green lines coming through this point, when you see that when this wicks down and it comes back to the body, that the body matches this point, that's a very clear indication that it's coming to a bottom. And that, now look how this moves along this. And again, you could have this in for months. So this is giving you very strong confidence to realize this looks like the bottom. So now there's also a tendency to be a double bottom. So it's very possible it's going to come back down here again, which is starting to head down now, and that it's going to break this again, and that it needs to come down and set a double bottom, is to establish the bull channel. So it's not necessarily to support the bears. This is coming down to support the bulls, to set a channel to give the more space for the bulls to move into. So now I put this line in. And again, when I look back at the past, because I look back at the repetition of things, I look back a lot. I look back a lot. And the reason why I look back, because you see the same pattern being played out over and over and over. And it helps cut out the noise. So now look at this. I'm going to put this from the bottom back there to here, because that's where it wicked to. Now why am I doing that? Is because when you go back in and you look at double bottoms, is here's a bottom, here's a bottom. This bottom is slightly higher than this one, just slightly. Is this one, again, this is here you have this here, and again, they're always a little different. Look, here it is, here's the same play back up, and then here's a bottom. Here's it drops down, comes up, drops back down, comes up. So again, you've got your Elliott wave, and then you've got your ABC correction all the way down. So here you've got your correction down. Here's your Elliott wave back up, and then here's your ABC correction down. So here, as skewed as it is, this looks like an Elliott wave, a correction, and another Elliott wave, or it looks like one Elliott wave. And it's skewed because the price action went up here a lot more than it normally would. And I'm thinking that might be because of the solo airdrops, because all this was going on for days, and then only Bitcoin and Ethereum started to move in the last day or two, and did the same, but without all this movement. So now the challenge was, are we here, and is it just going to do a little drop and then keep going up? Or are we here and we're heading in for the double bottom? So now, because we've got this second drop, I'm pretty sure we're heading for double bottom. And the reason being, and I always was, but you still sweat it out a little bit, there's always, this is the point I'm talking about repetition, there's always the double bottom. There's another one, there's always the double bottom. Some are more than others. Look at this one here. The double bottom is lower here. Okay, here's another one. Is look, the double bottom is slightly above. So there's another smaller one there. Is again, the double bottom is there. So in this part of the pattern, there's always a double bottom. We haven't had our double bottom here. So, and it's playing out in its own unique fashion, still has the same pattern going on. So now, why am I saying this? Is because I'm putting this line in here. Again, from the bottom to the bottom of the wick. And I think the most this is potentially going to come down is to come down and touch off this line. So we might get, again, the touch onto this new bull channel, get a spike through onto this line. Now this is 61 and a bit. It may want to go further and go all the way to the green channel. Now that would be 46. That's a possibility. Might want to go all the way down here. Is it'll spike back to here, or it'll spike back to here. So, but I think the reasonable thing to anticipate is this line. Because more often than not, it likes to come down and stay slightly above this. And the reason being is because this is the end of a big ABC movement on the daily and the weekly. This is 1, this is 2, and then off we go for the big push, the big wave. So that's why it stays slightly above, so it can be the 1, 2 of an Elliott wave. Now I have that here already on my, where is it? Sorry, I have to look at it here. I've got one of these. Where is it? It shouldn't be down here. Where the feck is it? Sorry about this. Oh, is this it here? Is this it? No. Oh, that's the DXY. Ah, here it is, the last one. So yes, so here's the Elliott waves ABC corrections. So now, if this was an ABC correction, is here, this is 0 of the new wave coming in. This is 1. We need a 2. So 2 is going to be somewhere along here. So the most it can be is just above 0 here. Can't be below. So it needs to be just above it. So the most I think is going to come down is just above it. Could be less, but just above it. And then that sets us off on, again, if we do put the simple fib on it, from the bottom to the top. And again, because we're coming into the parabolic season of things, is we're going to go to the 272. And again, that's the general rule people are talking about, that it's going to hit 450 or so. Let's put this up to 450 or so. We'll get a pump up. There we go. There's a pump up to 370 I keep hearing. Then you get a retrace back to maybe the 414 at 271. And then we have that glorious blow off top. And then that's the 3 steps up for the new daily arc. We'll have our correction, you know, and then that might go on for a couple of months, and then we'll have another pump. Or we might have something amazing. This here is, and I would not be surprised at this. This here is, oh, come on, give me my, this here is 1, 2, 3, and then 4, 5 will be up there. So that people are talking about a $15 XRP. This will be the way it will become a $15 XRP in the coming months. That we're not waiting for a year. So that you get this wave, you get a dirty, filthy correction. Oh, it's over, it's over, bull run's over. Only for it to turn up, and we get this glorious run. And that this just turned out to be just wave 1 of a much bigger wave. So either that's going to happen, you know, actually no, I know it's going to happen, but what can happen is we can have this correction can be quick. We can have it quick like this, so the bull keeps going, or it gets stretched out, where it could go on like that. So now the correction is much longer, and it stretches out to further into next year before we get this blow off. So that'll show itself as it does. But that's essentially the play of it, yeah? That's the play of it. So now we are in the play of this, setting up this beauty. So now you can understand, the deeper this goes, the better it is. We don't want this. That's not good, because it doesn't set up a solid foundation. This is a lovely solid foundation. Okay? Now, I am mindful that it could go down here. We could be getting like all the way down to 141. But what does that mean, Roy? Well, what that means is that this here is the correction. I don't think this is going to happen, but if it did, if we went all the way down to 41, it means this is the correction. And then the Elliott wave is starting from here. And it drags out the whole process another couple of months before we get this. So I am mindful that if we break this and we start going down to 41, this is what's happening. I don't think it's going to happen. I think the first thing I said was the way it's going to happen. But if it happened that way, that's what's happening. Okay, so we're back to here. So you can see why I put in this white line, because you know it's most likely going to land on that, if anything. Okay. So now they're the basic parameters. Is I took this line from here, because look, here's the previous bottom. Okay. And when I put this in, okay, again, it gives me another measure. It gives me another measure of if it starts breaking below this, and it starts breaking below this, is we know we're in for a stronger. We know we're in for a stronger breakdown. So essentially, this is a measure that I'm looking at as well. That if it starts breaking below this, below 51, is the chances of it going to 41 or 30 are much stronger. I don't think it's going to, but I'm putting it in anyway, just as a marker. Now I put this one in. No, I'll put it in. I won't put it in yet though, because I only came to that recently. So let me stick to going in. We're going to go in now and get a little bit more local, yeah. So now this is telling. So you see the channel, you see the breakout that didn't happen. And then look what this created. This created the bear channel. The bear channel where it's higher, it's steeper. It's telling you it's going for a deeper drop. So that this tried to break out, it failed. So it reached this peak. It's coming all the way down. Once it breaks in, you know it's going to hit the bottom. So the top here helps predict the bottom. So now, how does it do that? Is let's take this line and put it in. And then just ask ourselves, Roy, how are you seeing that? Well, just from the simple explanation of, you can see the downtrend here, and you know that when this comes back in, it's going to go to the bottom. It's going to hit the green channel again. So you can that's fairly obvious if you zoom out enough and look at that, and you just know the trend of it. So then you go, okay, if it's going to hit the bottom, there's a central line coming through this. It's generally not the top. It's generally not the bottom. Look at the space in between. So if you run a line through here, there's some touch points. touch points, support and resistance along the way, resistance, 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 support, support, all the way down. So you can see how it was both support and resistance. And it's almost like when you get so much support and resistance on one line, it's coalescing. Look at the movement is coalescing along that line. So that tells you something. You can see that process over there. So this is your local central line, like this blue line here, but it's the local one. The top predicts the bottom. Okay, so there's that line there. So now,
hey Roy, I don't know if something's going on, but I can't see your screen at all. I don't know if anybody else is having the same issue.
Okay. Do you know it might be
Yeah,
that
it's not moving. His mouse is not moving.
yeah, I think maybe the internet might have dropped. I think that's what happens.
Okay.
Sometimes the internet drops and it gets disconnected. So
There you go.
there we are.
There
We're
it
back,
is.
back again. Back again. Okay, super duper. Okay, so so now I started doing this chart. When did I start doing this chart? When did I start doing this chart? Because I predicted that. Yeah, I had another chart before this. Bear with me for a sec. One sec, we're there with you now. There it is. There it is. Okay. Yeah, I first did this one on the 21st of December. Now this is my second one. If you remember, I'm just pulling up the there we go. Yeah, so this one I started on the, where did I do it? The 21st. I started this one about the 21st of December. So this is when I mapped all this out. And if you look, remember my previous one. This one here, no, it's not it. This one. This is the one I mapped out from the 6th of November. So on the 6th of November, from here, I set this up so I could map all this. So from the 6th of November, I've been mapping all this. Again, hitting that target, yeah, calling that. So now here's the price action going on, mapping it out. So then I decided I'll do another one, and I start mapping from here because again, I'm looking to map out the next drop. So that's where this chart came in, yeah. So now some of this information was already set, so I knew this line, and you can see that the price action is here. I go on to the clearer page. Here's the line coming down, the center line. Here it is breaking back in. It's creating its own access point where it's transitioning from being out of the channel into the channel. Okay. Now, if you also look at what else is moving through that. Why is this an access point? Because it also is where a support and a resistance line meets. So you've got the central channel, you've got the green channel, and you've got the support and resistance all coming together. So look at here, when this kicks in, this is where the spill starts to happen. This is where it turns. You can see the spill here. comes back up and tests this line here, and then back down and drops. Now look at this one. Look at this line here. Because the top predicts the bottom. When you can see it from the center, is the top predicts the bottom. So I had the butterfly movement. You'll see me do it. You'll see me put in the butterfly lines. That when I see that you get this coming down, you get the spill, the axis point, and the spill starts to happen, you will see me put in different butterfly lines. Because one of them I know is going to predict the bottom. And that part of you're looking for the butterfly lines, you're looking, look, there's support and there's resistance. You're looking for it to have both. So now here's the turning point where these 3 points meet. Here's the spill, and the spill, this line here, nails the bottom. And look at the confluence of all these lines as well. So there's so much confluence here that it just matches, just hits. Beautiful. So now the challenge is, let's see if we can roll on and see what we can do with this one. So now here's this here, here's this here. I realize that this here, when this price action comes in, comes up to here, comes down to here, I realize that, look, this is now setting an up channel. It's setting an up channel, and it's using it to break out. So now here's the bull channel establishing itself. But I also look at it and go, this is too steep. It's not sustainable. It's going to get rejected. Look where it gets rejected. And again, I went in on a short. You know, I went in on a short earlier because I thought this was where it was going to get rejected. And you can see the Elliott wave. And then if you remember this, is that it was a long term, it shifted from low volume. This is what was really confusing here. This was moving in low volume, and partly way through the Elliott wave, feckin' volume appeared. So it was tricky. It was like a trick. You know, it's like I measured to the volume that was there, spot on, absolutely reasonable. But then the fecker kept going, more volume. Okay. Where does it go to? It goes to here. Gets rejected. I knew it could only go so far. But that was the sweaty time where I was going, how far is this going to go? Went to here, double topped, and then down it goes. And part of the question was, is it double top to break out again? And it wasn't. Down it went. Here we are, look, coming down here. And this is going to do an Elliott wave down. 1, 2, this is 3. There's going to be a 4 and going to be a 5. Something like that. Okay, and I believe it's the correction of this. I believe all of this is an Elliott wave. And it's a difficult one to read because it seems inconsistent. It seems like it's breaking rules. But I believe that this is the correction of it, and we're going to find ourselves somewhere down here. So, following this line is really important. I'm following it through, and when I see that this line is set and I see this line is set, when these 2 points meet, look at what's happening with price action. I'll go on to this one because you can see it clearer. When these 2 lines meet, look, it touches there, and it touches there, right there. This is where price action changes. Look, it comes up, it touches, doesn't get a bit of life, I guess a bit of life, comes back down. But this is where the turn for the takeoff happens. Right at that point. So you can see that this is an axis point as well. A smaller one, but it is one. So we'll pop that in there. And again, that's the turning. And then look what it's following. Remember this white line? The base, and now look, it takes off. This is where this bull channel starts to show itself. You're looking at it going, what the hell's going on here? What the F is going on here? And then you go, well, hang on. If I take a line from here and I follow it here, look at the symmetry of that. Okay, this is going up, this is going up. Okay, this is the bull channel. This is setting itself up. Logically, this isn't going to last. It's not going to keep going up like this. It's going to run out of steam. And again, it didn't. This is the 1 hour arc. It didn't break the 1 hour arc. I would have been very surprised if it did. It didn't, but it went close to it. Now we're having our mountain peak, and now we're having our second drop, and now we're having our third drop down. So you can see it's set the channel. I thought, well, okay, that's set half the channel. It hasn't set the bottom half of the channel. And that's when I sort of shifted, got a little bit more comfortable about, okay, the double bottom looks to me like it's in. This mountaintop is in. It looks like we're coming down. And that we need to establish a second half of the bull channel. And normally, it's just split in half. If this is half, generally, it's the other half. It's very uncomplicated that way, you know. So, and for sure, we might come down and have a spike through. So now we've got this axis. And then we're looking at this. So again, we see the breakthrough. Okay. We see the rejection. And then we start to see the spill. So now look, butterfly lines again. Now I left this one in. I had 3 in. I took the rest out because I think this is the one. This is the one that's potentially showing us our pathway. I may be wrong. I may have to adjust it. So now this is where I started to map all this out. Here's where I mapped all this out. This hadn't happened yet. But look at how sweet it landed there. So now what I did there is I also realized that this is going to be the plumb line. I realized that. So what do I mean by that? Is the plumb line is the center line. This is where it's going to drop. This is where the divergence happens between the lift, the break. This here is the confirmation of the breakdown. Right there is the confirmation of the breakdown. So I called it the plumb line. Oh. Copy that there. So there's the plumb line. And again, it's setting the tone. Follow it down. Follow it down. If you take this measure here, this distance, you see me do it earlier on, and then you put a line there, you copy this, and you put that there, that's where you get that line. This is literally how I did it. I took a line like that. I brought it down here. There we go. I cloned this one, put it there. Now when you look at the plumb line, look, it just happens to be right where this pink line and this center line lands, right on it. Okay, now I call this the level. Why am I calling it the level? I have to remember now why I'm calling it the level. I'm calling it the level for some reason. Okay. is the reason why I'm calling this a level is to do with the fibs. Is when I map out the fibs, when I treat all of this as an Elliott wave, is awkward and as difficult as it is to map it. And I bring it down. Okay. No, that's not giving it to me. Maybe it's the local one. Ah, okay. Let me see this one. Okay. Got that wrong. Okay. Okay. Yeah, my other option was, if this is one Elliott wave, this is a correction, then this is an Elliott wave, and then this is the ABC correction. And I was looking for, this is going to be a correction that's going to break out. It's going to hit the 414 or the 618. Now, neither one of them are hitting that level there. But that's one of the targets that I had and the target is a 0.65 is a strong potential. So I'm going to be very honest with you now. I can't remember. I can't remember why I put that there like that. But I do know it's relevant. When it comes to me, I'll let you know. That's funny. Okay. So now, you could be looking at this orange line here and going, what's this orange line? This orange line is just a simple support and resistance line. Well, Roy, why are you putting it in? Because look how much of a support and resistance it is. It's been as much a support line as it has been a resistance line along the way. Again, a lot of support and resistance. So I put this in as part of me helping measure out the drops. I'm curious to see, you can see that I hit this line, did a bit of work on it. I'm curious to see if again it will hit this line and it'll be rejected by it. I don't think it will, because this drop is only beginning to happen now. So I believe that it's definitely going to go lower. So they might get a retrace here. Is this line here might be where it stops at 79. I believe it's going to get through that line as well. And the reason being, if we look at it as an Elliott wave, 1, 2, 3 is the biggest wave. 3 will be the biggest, and then we'll have the bigger retrace, 4, and then we'll have 5. So, excuse me, I think this drop has the potential to even break through the 79 and possibly get as close as, well, if you spread out a little bit, could hit this here around the 70 mark. And again, it would establish this line. And you might get this big retrace coming back up here, 3, and then, 3, 4, and then 5 coming down and hitting the level, which when I can remember why I put it there, I will. Do you know what it is to do? It is to do with the fibs, because when I look at that, it's 63.75. It is absolutely a fib line. I just can't remember right now. I can't remember why the fib that I measured it off is maybe it's this one. If I take from the top here all the way to the bottom here, okay. So I'm going to the bottom here. No. Okay, so now if I go all the way to the top here, so now I'm going all the way to the top here, all the way to the bottom here. No. Okay. No, no, I'll have to wait and let it come to me. When it comes to me, I'll let you know. Okay. So I put this line in because it was the support and resistance line, and I'm using it as part of the potential steps down. It's helping me mark it out. The same with this is here's the potential bull channel bottom. Here's this potential. Remember this line here? If it hits off this line, we have our 1, 2 of the greater Elliott wave. Is if we want that to happen now, we don't want it to break this line. If it goes below this line and goes lower, well then this was not the ABC correction. This is the C of it, which means that 1, 2 gets pushed out, and it takes longer for us to. We're another couple of months away. It'll be springtime before we really kick into the bull market, and I don't think that's the case. I think that's coming very soon. So we're here. It's coming down. So the top predicts the bottom. I put in butterfly lines because they look like butterfly wings. So I put them in, and there was ones that came down steeper. They came down and landed here. Time has passed. It's not that one. Excuse me. Time has passed. There was one closer, but no, it's not that one. So now this one here very much looks like it's in on the timeline. Timing-wise, it very much could be that we have a destination of here. A destination of here. It very much could be that we get because this is on the 4 hour, we get our drop down, we get our retrace, and then we get our drop down. And landing here on the 63.83. I really wish I could remember that. I know it's due to fibs. It's killing me now, but it'll come to me. So I think this is the axis point. I think in and around here is where we get our final drop, and we get our landing around here. It may want to go down to here, and I believe that'll be it. And then we have our bottom. And if we get this, wherever happens, we get the retrace back up, most likely onto this line. And then when you see it gets out of here, then I'm a bull. To be honest, when this lands, I'm a bull. And you see it moving out of here, is I will switch to going long, and I'll be a lot more mindful about going short. And I'll look to trade the longs up, wait for the retrace, and then go back in on another long. Because what I've been doing all the way down here is waiting for the retrace and going in on the short. Is now it'll be waiting on the retrace and going in on the long. It's safer. Okay, so that's it. So now I'm watching the show to see is the local top predicts the local bottom. It might even land here, a bit like this. It dropped here, came and spilled to here. So we could find ourselves getting a drop here, and then it coming over, and then it's spilling down onto this line or that line. Something like that. If it wanted to go further, so remember this could be just here or here. Okay, that could be the length of it. But why did I put it all the way to here? What's already here? Look at this line. Look at this yellow line. You follow it all the way through, and look where it just happens to land. Exactly on the same space as this one. Now there was other ones, but they finished earlier. Price actions past them. So this is the one that seems like it has the space to catch and hit. If I wanted to go lower, that would be my next target. That would be my next target. So that's my thought process through it. Yeah. Has anybody any questions? Put that there like that. Has anybody any questions? So can I suggest something to you? Is I'm gonna post this. I'll post the updated one. I'll post it with the link, and then I want you to copy it out. I want you to open up your own blank chart and do what I just did there. Is go to one, take a line, copy it, and put it in, and see if you can remember the process that I went through. See, look, work from the outside, get the predominant lines first, and every line you put in, explain to yourself why you're putting it in and what does it mean, so that you're going through that process in your own mind, that you're going through it. Why did I put this blue line in? Now that I see it here, look, here's the bottom here, but look, here's the bottom. Look how it cuts through here. Look what it hits. Touches right there. So now, when I'm looking at my bull channel, when I'm focusing more on the channel that's going up, this is a line that's already showing itself to touch, support here, resistance here. So now I'm looking at this as a local center line on the way up. Again, could be just for here. Might break up, and get itself sitting on this and running along it. Something. And I'm just putting this one in as well. Just as the starting of, when I'm looking at the bull channel, is I'm starting to look at my lines that are going to start moving this way. Because once this is complete, is I will set up a new one. I'll set up a new one, and it will be all about, let's look at the lines here. Like, I'll look at these lines here. Where are these lines here that are helping me predict the way up? So my view will be looking from the bottom here up and looking for this. And now we're setting up the bull channel. This is all about the transition. My first chart was about mapping this down. Now this one is about transition. So copy it, and then talk yourself through it, because the process that I'm talking you through here is you're going to get it over and over and over. You're going to get it over and over and over. And if you think of it like this, is look at the wheel, the cogs here. Down, up, down, up. That's why this is challenging for a lot of traders. Is that it has that in it, and it's at the bottom. So the bulls and the bears are transitioning. Okay. So you're going to come across this over and over and over at the end of channels. So talk your way through the lines, and see if you can tell yourself the story. And if there's any parts of the story that are not fitting in, and you know a line is important and it's not fitting in, is send me a little, do your own thing, send me a little picture, and go, Roy, why is this line important? To remind me what's important about this line. This is what I understand it to be. Am I missing anything? And then I can give you that little bit of feedback. And it's just you going to the next level of your channels. Look, you're getting your channels, but you're not just reading what's in front of you. You're starting to map what's coming ahead of you. And you're not just reading what's in front of you. You're starting to recognize center lines where the top begins to predict the bottom. So that's you moving on in your channels. And to be really honest with you, working at a level that most traders don't understand these center lines like this. They don't get them. They don't understand that perception. For this simple reason, is that center point. Is you're looking from that center point, your perception is you can see it all as one. and just it's all moving as one pattern. Okay, part of what really supported me here in this, with all the FOMO and all the pushing and the pulling, is looking at the back chart, looking back and going, again, myself and Crypto Clear, we had these conversations, double checking with ourselves. Look, it happens here and it's happened there, it's happening all these times, hasn't happened here, you know. So it's like, okay, if it hasn't happened here, well then it has to happen. So we're here, we're not here. We've had that conversation a couple of times just to really check with ourselves. So, and we said, no, the double bottom has to happen. So anyway, anybody, any questions? Okay, this is real study with regards to the trading and the detail. This is proper study. It's not something that you just look at once and go, that's nice, and dismiss it. This stuff is like this. When you get this, this is part of your trading for months. You understand that this green channel from the 13th of April, still relevant today, up until most likely sometime in January, early January, hopefully, this channel is still relevant. From April, 7 months of your life, 7 months of your trading life, this channel has been a big part of it. So the more you can understand this channel and then recognizing the nuances of support in it, this is 7 months of trading. Okay, so it's really important. And then it's a lot of fun. I know at the start it can seem a bit overwhelming, but again, copy it, one line at a time, talk your way through it, and then notice the gaps, and then come back to me and ask me about the gaps. And then we'll fill in the gaps as we go along. Some of your wins, how are you winning in this? How do you know when you're like, wow, this is really coming for me? I'm really getting this. Okay, getting these lines are really good. To be honest, it's excellent. But when you start to be able to recognize a channel that's coming, okay, that's a level up. When you start to recognize true lines, that true center lines, that you're not just recognizing the channel, you're recognizing the true line that the bottom or the top predicts the bottom and the bottom predicts the top. When you start recognizing these, that's another level up. Is when you start recognizing axis points, convergent points, that you get a tipping, and that this tipping is setting up the spill. So you're going to set up, this here is going to tell you where the bottom is. So when you start recognizing these convergent points and then the axis nature of it, again, that's another big win. That's a big trade. That's an enormous trade. So anyway, okay guys, thank you very much. That wasn't too long. That was only an hour and a half. God, this will be a short one. But I packed a lot in. So I have a video that I'm editing at the moment. And what I will do is, I have other ones, but I will do this one tomorrow. I'll do this one tomorrow, and I'll look to get this one out tomorrow or the next day. And you can get cracking on it, yeah? So for now, have enjoyed the rest of your day, and I will see you. I'll see you for another session tomorrow. All right. Cheers, guys.
Thank you.
Thank you.
Thank you.